So, but we have been talking about fintech. But what is fintech actually? And can we basically start from scratch, saying that what is exactly fintech and how we can define or describe it? And because so many people, they also I have they are very good financial expert, but they say that fintech is nothing because we have been using technology in the financial sector for a very long time. So why fintech? So why you are appreciating so much about technology? Finance is finance, and the use of technology will be secondary. But I differ because now I can see that the role of technology has become so immense that it cannot be just simply undermined. And technology right now is dictating the business model also. So because of the technology you have in your hand, you can actually devise a product, you can develop it, you can create it, and then you can roll it out in a very, very unconventional manner. So that's why I can say that fintech does need an appreciation, and also it warrants some focus and attention as well. So there are so many definitions actually of fintech. Some of them, they were pretty much focused on startups, saying that fintech is all about technology startups into looking into finance. Some like the World Economic Forum, and then PwC has also defined fintech as the evolution or the evolving intersection of financial services and technology. And then Accenture, they say they were pretty much focused on the technology itself, that's saying that AI, using AI, blockchain, data analytics and big data is actually fintech. But every if you look at all these definitions, you will see that these definitions are telling us mainly a basic idea of what is fintech. Some of them are focusing on technology, some of them are focusing on startups, some of them are focusing on products, and some of them are only focusing on money itself, that how to store money, save, borrow, invest, move, and pay and protect money. So, but in a nutshell, I can say that fintech refers to the integration of technology into financial services to improve their use and delivery to consumers. So the way I see fintech is that it is not a disruption, but it's a facilitator and enabler of financial services. It is basically here to improve the financial products and services, and enhance the financial inclusion and promote it further. And that's why it primarily works by unbundling. Unbundling is basically another terminology for this aggregation, I can say, because right now what I can see that when you have a financial product, it has many aspects and it has many dimensions. And now looking at the whole product, if you can basically separate those dimensions from one another and try to master or create your expertise in one dimension only, that then you can basically have a very efficient product. That is basically the main idea. So for example, like KYC, know your customer, is basically a process for a financial product, right? So can be a company, a fintech startup or an established company, which can say that I am only specialized in KYC, so I can provide the KYC procedures for banks, and I can actually facilitate the financial products offered by banks, but in a very efficient manner. So that can be done. So that's why this integration is this aggregation is taking place. And now, but there are different approaches to fintech, like how fintech is impacting the traditional financial industry. There are mainly two ways, or three, you can say. So some of them are actually competing with the traditional financial institutions, and giving them very hard time on the basis of efficiency, agility, and cost. Of course, like by using technology. But there are some fintechs also which are not actually challenging the traditional financial institutions. Rather, they are trying to improve their services, or they are acting as a facilitator for them. So this is also a very good phenomena, and I think that that is basically the way forward, because most of the traditional financial institutions also looking forward to have collaboration and partnerships with fintech. So looking at the core technologies of fintech specifically, so first of all is mobility. So we have mobile phones. So you can say that in your mobile phone, in your smart devices, which you can carry anywhere practically, you can offer digital and branchless banking and other financial services to increase financial inclusion. And with the usage of artificial intelligence, we can improve and expand credit offerings, insurance options, personal finance services, and regulatory software. These are just the example, and this list is not exhaustive. So I'm just giving you an idea that how these technologies are put together to facilitate the financial products and services. So if you can see that the IoT devices are being used to gauge human behavior, that how human beings behave, and it collects huge data, which is basically quantitative and qualitative both, through connected devices, and that can be shared on blockchain, where you can have a very enhanced framework for transparency, public disclosure, and security. And then you can also increase P2P in networking, decentralization, and disintermediation through blockchain. So let's suppose that you first collect data through IoT devices, number one, and then you put it on the blockchain so that it can be shared with various parties, right? Regulators, financial institutions, and third parties as well, which are providing some services, which are primary and secondary both. And then you can run smart contracts and decentralized application on that. So with the smart contracts and decentralized application, automation of transactions, increased compliance and regulatory requirements can be met. And big data and predictive analytics can basically be used to transform consumer data to provide value-added services to customers and enhance and improve products and services while identify and quantify the risk itself. Because you can see that the financial system is most of the time is all about risk management, that how you can identify, quantify the risk, and then how can you put the best risk management strategy there for any financial product or service. So that is basically important, and big data and predictive analytics is actually helping us a lot in that sector. And then with cloud computing, you can embrace cloud-based softwares, and then micro utilities, productivity, and shared databases and automatic upgrades you can get easily through cloud computing. So these are the main technologies. Now moving on, fintech is actually impacting the traditional financial institutions, the whole financial system, and its customers in a 360 degree fashion or way. So we can see that it encompasses all the activities, for example, lending, currency, regulation, personal finance, payments and billings, insurance, capital markets, wealth management, money transfer and remittances, mortgages, and real estates. So actually it is combining and covering all these sectors and trying to improvise on the existing products and services. For example, if you look at payments and billings, so payment processes, card developers, and subscription billing softwares tools are already there, and they are quite efficient. And then we have personal financing for P2P lending as well. Corporate financing is also there with lending and borrowing mechanisms. And we have seen wealth management with the robo-advisors and also analytics tool. So these are the tools which can be used to actually enhance the scope of wealth management. So, and this activity is very superb. I'm not sure about this year now, because I am still waiting for the figures to come out for the first quarter of 2020. But until 2019, we have seen that there were more than 11,000 total deals in fintech, and with those deals carried more than $378 billion investment. So that is a very huge impact basically, and we will see more activity in this arena in the near future. Now, moving on from the fintech to our case study, now we will see that how fintech is transforming banking. So from traditional banking to open banking, we have seen a very interesting transformation. So let me just introduce the idea that what is open banking first. That is, in my opinion, is the future of banking. And it involves standardized APIs, application programming interfaces, and data-driven decision-making from insights, from customer informations, and also from other analytics. We can basically gather information from internet as well. And then if we can basically transform that data into information, and that information can lead us to the knowledge, where effective collaboration with financial institutions can be possible with non-financial institutions. So that is basically the idea behind it, and it emphasizes on the focus of the open banking is excellence in data usage. So now we were having excellence in products and services, but now it is all about data, that how you can utilize the data. You have large chunks of data. In the future, if we will have quantum computing, that the quantum computing will process that big data in a matter of nanoseconds. So with that speed, we will be able to utilize that data more. And then we will have seamless exchange of resources. So what I'm trying to say here is that, like, you do not have to actually gather all the resources in order to provide a financial product or service. Rather than what I see is that, like, there will be a seamless exchange of resources. So the resources will be placed with different parties, with different players, but there will be an exchange among them, which will be very seamless and very quick, that the user or the customer of that system will not see, will not basically feel the lag there. And then we will also have improved experience for customer. So right now, the focus is changing in the traditional banking, that what our customer wants. So it is not about having a very excellent product or service, but rather than having the best customer experience. And then with all this mechanism and the framework, what will happen is, like, the product innovation will take place very rapidly. And because of that, we will see in the future that there will be a lot of customization in banking products. So for example, like in open banking, we will see a move away from products to an emphasis on customer experience, that we will have to enhance the customer experience rather than products itself. Number two, assets to data. So a financial institution will not have so much assets in their as their resources, but they will rather be more focused on data itself, and then how to utilize their data. And also there will be a shift from ownership to sharing. So, like, instead of having everything in your hand and owning them, you will be basically skimming through a more shared economy or environment, where resources will be shared among the people, or among the parties and the different service providers. And then we will also see how it will be possible is because of the partnership. So rather than having a financial institution which is trying to develop its own product, you will see that there will be so many partnerships there rather than instead. And then these partnerships will basically enhance the basically product innovation process, and also the user experience. So these are the main objectives of open banking. And then we will have modern banking maturity levels. So from traditional banking, we have seen online banking, mobile banking. Then we have already seen complete digital banking, which are basically neobanks. And from neobanks and complete digital banks, we will also see this. We will also see this open banking. So we have already got into that era. Now, it is very interesting to know that like some of the developing countries are still struggling with the idea of online banking or completely digital banking. But for developed countries, the idea is already old, and they have already moved to a new phase, which is open banking. So how open banking is possible is by various features. So first of all is API. So like we have application programming interfaces. With that, you can basically connect with different services and products, even if those services are not comprehensive, but still you will be able to gather those services to create a comprehensive product. Citibank and Barclays, they are already working on an API environment, and they have already developed an API environment for the developers to actually roll out new products and test their proof of concepts. Number two is altered financial services. So like having a very good product or service for all types of customers, you will have so much customization. So like the financial services will be completely altered in that manner. Uh, for example, like Orange Bank has successfully connected with strategic partners to develop full-fledged banking capabilities. So if you look at Orange Bank, it's a very good example because Orange Bank has not developed a single product itself. What they have done is like through partnerships, they were able to connect different players and different service providers, and they were able to basically roll out a comprehensive financial product. And then we also see that in open banking environment, uh, we will also experience structured collaboration. For example, banks, they have huge amount of data, they have huge customer base, and they have global outreach, they have trust, they have branding. But on the other hand, they are slow, they are not very innovative. So opposing to that situation, fintech, they do not have large amount of data, they do not have branding, but they are agile and they are innovative. So we will see that in these terms, on these terms, we will have some structured collaborations. And then it will give actually a clear guidance to banks, while fintechs will be able to scale up rapidly as well. So it will be a win-win situation for both. And then we will all not also see that only fintech and traditional financial institutions are collaborating with each other, but we will see some cross-sector partnership. For example, how about IT firms, big techs, and how about telecoms? They have a very good outreach, and we have a very good example of M-Pesa. So M-Pesa was also there in Kenya, and it was only able by by telecom company to evolve and revolutionize the payment system and the money transfer system. So we will also see, and you might have also, most of you have already heard about Facebook, that they are trying to have their own cryptocurrency, which is called Libra. And by the way, let me just tell you that Facebook has already got the license, I think, because a long time ago they applied for a license for payment system. So what will happen? Imagine that Facebook tomorrow will start off offering you banking services. So you do not have to have a banking account, but rather than having just a Facebook account, and they have already got your data on everything, which is quite strange, but it is the fact that they already know that where you are going, what you are eating, whom you are meeting. So imagine that your bank also knows all of these things, and they can offer you financial services. Of course, there is a good side about it and the bad side. Bad side is that like uh, that people will be scared about it, and they will be pretty much concerned about their data protection. But on the other side, you will have a super customized products and services at your disposal. So that's why we will see in the future an evolved banking system ecosystem, where you will have new banks, you will have challenger banks, you will have big techs, you will have retailers. For you have already observed that so many supermarkets like Walmart, like Carrefour, so they have already started giving loans to their customer, saying and they have already started giving installment packages for products and for their own products. So now they are also coming into this financial sector arena. And in Malaysia, for example, we have Grab. Grab is a local version of Uber, but they also have Grab Wallet. They have Grab Credits, and the whole and the financial system. So imagine that this transportation company is also interested in financial products and offering financial services to their customer as well. And telecom companies are already there, and aggregators. So this will be a very challenging situation for traditional banks, because aggregators are like platforms like Lazada or Alibaba, where the financial services are being provided and offered to the customers. But you do not have to have one party for to provide you, like in the future it will be very irrelevant to ask somebody that where do you have your account, in which bank do you have your account. You do not have to have a bank to have an account. You have an e-wallet, you will be having a digital account which will be administered and managed by a non-financial institutions maybe. So that can be a future scenario. So aggregators are actually trying to also provide financial services, and then in the future we will have some digital marketplaces for those financial services, where you can pick the best product and service for yourself. And then future impact of open banking on core business areas. So it is not again a fiction, it is not again an idea, but it is already in the pipeline, and it has already been felt by the conventional banks. So there was a survey where banks were interviewed for the impact of open banking, and we have seen that these are the percentages where can excuse me. Yes, sorry. Thank you so much for muting the mic. So what I'm trying to say here is that, like, in the traditional financial institutions have already started feeling the wind, and they can see that like 90% of their payment business will be impacted by open banking. Similarly, like lending, for lending, they can see that like almost like 54% of their business will be taken over and impacted by the open banking. And fintech also see that like this will also happen in the near future. So now we have already covered what is fintech and what is its background, what are the features, and then we had a very specific case study of open banking. So let's move on to Islamic fintech. What is Islamic fintech, and how can we define it? So unfortunately, I tried to basically have a very quality definition. I tried to find it and search for it, but unfortunately, I was not able to find it. That there is a proper definition for Islamic fintech. There were some different approaches I will be telling later, but my own definition is that Islamic fintech is about developing and offering improved Sharia compliant financial products and services through the use of latest technology. So, sorry, let me just go back to the slide.
Online services
Sorry, yeah. So now, the reason why I'm saying improve Sharia compliant financial products and services, they will be improved in so many ways. One way is their efficiency, second is cost, but also in a Sharia compliant manner. So I truly believe that Islamic fintech will be something which can claim that it will be more Sharia compliant than the traditional Islamic finance. And later on, I will be discussing in the next slide, I will be saying why it is that. And also we see that the use of latest technology will help us in improving not only cost, efficiency, and seamless delivery of the products and services, but also I see that the Sharia compliance and Sharia governance framework will also be improved with the use of technology. So Islamic fintech requires the use of technology in a Sharia compliant manner first. So that's why it is different from other forms of finance. And then the financial products and services should be Sharia compliant as well, of course, because now here I am basically trying to separate Islamic fintech with the conventional one. But I also see that why it is separate from the Islamic finance, traditional Islamic finance, because there should be a comprehensive Sharia governance framework, including standards, parameters, review and audit mechanism, and risk management, separate and different from the traditional Islamic finance. So that's why, because in technology, you can see that the behavior of the products, services, institutions, people will be completely. So why Islamic fintech has great potential and it warrants a separate attention and focus, and why I truly believe that it's a very complete, it's a new discipline, and although like it has some overlaps and similarities with the traditional Islamic finance, but let me just tell you why it is different. So initially we had conventional finance, and Islamic finance came in as a disruptor. And it actually disrupted in the sense that it was Sharia compliant way of financing, and it has proved itself as a complete alternative to the conventional finance. So it was a disruption to the conventional finance in the first place. But then came in conventional fintech. Now, conventional fintech was able to disrupt conventional finance and Islamic finance both on the basis of technology. Now, I believe that Islamic fintech has the potential to disrupt all these three. So like conventional finance and conventional fintech will be disrupted on the basis of the Sharia compliance, but traditional Islamic finance will also be disrupted because Islamic fintech will have more muscles in terms of technology. So if you look at the Islamic fintech framework, you will see that it's not part of a smaller part of Islamic finance. Actually, it is the future of Islamic finance. So what I can say that like Islamic finance is now going to be transformed into Islamic fintech in the future. So Islamic fintech can comprehensively offer services like deposits and business and consumer financing, trade financing, treasury products, wealth management, insurance. And then you can also break down these services into various, for example, like deposit services like Sharia compliant deposits, saving deposit, current accounts. And then you can also have consumer and business financing through Sukuk, digital smart Sukuk. We have already seen a smart Sukuk, blockchain based Sukuk. And also then we also have seen Sharia robo advisory coming up in the space. So with these things, and then we also have Takatek, which is Takaful technology, Takatek and Retakatek also. We have seen that these ideas are also emerging. And with the use of technology, for example, like back office, middle office, and the front office will be changed. And that's why I say that like this disruption is a very comprehensive disruption, and it is going to basically transform the whole Islamic finance industry into something very different. So that's why we really need to understand that there is something which is called Islamic fintech, and it warrants some different attention. It warrants some different type of skills and talent and education to and also education and also the skills for product development in this arena. And then we have consumers on one side, which are consumers, businesses, financial institutions, which will be the ultimate beneficiaries of this whole system. And then if you look at the ecosystem at the moment, so we can see that right now it's very niche, but in the future it is going to be very big. At the moment, you see that there are Islamic fintech, and if you look at the regional concentration, so most of them are in Indonesia, and some of them are US, UK, UAE, Malaysia, and there were some other countries as well which are trying to come into this space. But most of them are in Indonesia, number one. Number two, most of them are concentrated on P2P financing. So it means that like we were only able to exploit a very smaller part of the whole financial system. But there are so many opportunities there for other sectors to be exploited by the new entrants. So moving on to, if you look at the current landscape and the current players in the Islamic fintech, so we see that there are a number of players in alternative finance, crowdfunding, takaful technology, blockchain and cryptocurrencies, data analytics, and digital banks, Islamic enablers, and then we have personal finance management, technology infrastructure, trading and investment, payment and remittances, and robo-advisors. So there are so many categories, there are so many sectors where Islamic fintech is happening or basically trying to make its mark. And there are so many entrants for them, but I still see that like this whole landscape is very small and it can be enhanced. Like there will be thousands of players in the world in the future. And there will be so many opportunities for Islamic fintech experts and the institutions. So now just let me go through the basic of general Sharia rules for contracts, because in the next slide, I will be talking about that what are the Sharia challenges and what are the Sharia issues in fintech, so that because of that, we really need Islamic fintech. So just to brief you about it, that there are specific conditions in Islamic law about a contract. So there should be a statement which needs to be there with certain rules and requirements. And then there will be some conditions for contracting parties, and there are separate specific principles and rules for subject matter of a transaction itself. And then we need to see that all the pillars of a contract should be there to form a contract, whether it is financial or non-financial. Excuse me. So now Sharia issues and challenges in Islamic fintech or fintech in general is that number one is validity of smart contracts from Sharia point of view. So we have seen in the previous slide that there are specific rules, principles for a contract. So how we can ensure that in a smart contract, all these requirements are fulfilled, number one. Number two, ownership, possession and transfer of a virtual subject matter, a digital asset. How you can have you can basically ensure, you can create standards and parameters for the ownership, possession and transfer of a digital asset. So that is again another challenge, because if let's suppose as an outcome of a contract, you were not able to prove that there is a transfer of ownership, then what is the purpose and benefit of a contract? That is the basic question. And then multiple algorithms as contracting parties of a transaction is again a problem. Like in the previous slide, I also mentioned about that there are specific rules for contracting parties. So how multiple algorithms, I'm not talking about binary algorithms here, like you can say that, okay, whoever has created an algorithm, we can see that like he's whether he's making an offer or whether he is making an acceptance for a subject matter of a contract. But here it is not happening. What I'm saying is like these algorithms are actually powered by artificial intelligence, which means that these algorithms can think, these algorithms can make their own decisions, regardless of the human intervention, and without any without the intervention and interruption of their creator. So because of that, we need to really see that whether these algorithms can be legal entities, these algorithms can become contracting parties of a contract or not. Because on both sides you will have one asset, but two algorithms talking to each other digitally, and basically doing some trading, buying, and then others sort of stuff. And then decentralized autonomous organizations, we need to also see this is again a very new idea. And and then we cannot simply extend the understanding of Islamic legal entity to the DAO, decentralized autonomous organization. So we really need to see that how these organizations are formed, how they are created, how they are working, and then how you can say they are Islamic or not. And then ownership, possession, and transfer of a subject matter in high speed transaction is another thing. Like we have speed trading, we have high frequency trading and algorithmic trading. So how you can ensure that even for a nanosecond or even lesser than that, if there is a transfer of ownership of a subject matter which worth like $100 million, so you cannot easily overlook it and say, oh, there was a transfer of ownership. You really need to understand that how it is happening, how you are doing the risk transfer and risk sharing in those contracts and in those activities. And then ratification and correction of transaction in algorithmic trading is another issue. And Sharia robo advisors, their liabilities, their responsibilities is another issue. And in future, I think there will be a lot more challenges and issues for which we need to be prepared. Again, the thing is, like, you need to have a you need to have a fresh ijtihad or a fresh look over these matters, going back to the prohibition of Islamic law. Like, you need to avoid gharar, you need to avoid riba, maisir, fraud, deception, coercion, and other prohibitions you need to cater for. So once you understand and you are able to basically do a fresh ijtihad, only then you will be able to face these challenges. There are some other issues. I think that these are basically common, whether it is Islamic fintech or conventional fintech. But I think that even people have started recognizing conventional fintech, but not Islamic fintech. That's why recognition is very important, that we need to understand that there is a need for Islamic fintech. So lack of knowledge and awareness and educational programs is another issue. So I highly appreciate the organizers for organizing this event, this webinar. And also I am Alif Technologies is also focusing on specifically designing programs for Islamic fintech, so that like there will be so much awareness, and then people will be able to equip themselves with the right set of skills and expertise. And then second thing is regulatory and legal framework. We need that. Absence of suitable mindset is also, again, if you remember that I was talking about that, I believe that Islamic fintech can be robust in terms of Sharia compliance, is because like now fintech is giving us the opportunity to stop the imitation game. We can basically do away with all the tweaks and also the replication of conventional products. Like there was an approach of and because of that of approach of replicating conventional financial products in Islamic finance by making them Sharia compliance. This approach has basically raised the issue of a academic debate or a philosophical or theoretical debate of products being financial products being Sharia compliant or Sharia based. So I think that with this debate, we can put an end to this debate with the use of technology, because now let's suppose that Mudaraba was very risky for traditional Islamic financial institutions, but we can have specialized Mudaraba houses as fintech companies, and they can basically mitigate that risk, and they can focus on that specific product and make this product as a streamlined product. So this can happen basically, and then in a sharing economy, it is also more possible, I think. So with that, I think this is Islamic fintech. But let me give you a quick case study for the crypto asset, because I think that that is the basically the a very good example which can show you the tip of the iceberg. But there are so many other issues with the in the fintech which we need to tackle. But let's see that what is happening in the crypto assets. So first of all, there are some let me start with the with this acceptance that there is a lot of negativity surrounding the phenomena of crypto assets. So there were some cybersecurity loopholes, like theft and hacking happened in 2018 and 19 and before that. But it was estimated the loss due to that was almost $1.7 billion only in 2018. And we crossed that figure in the first half of 2019 by,
Excuse me,
by
Dr. Farouk Habib.
yeah.
Sorry to interrupt you, but we are going to reach to the end of the session soon. This is just 1.5 hours. So we
Mhm.
need to have some time for the audience for question and answer. So if you can just
Okay.
quickly wind it up, I'll appreciate
Okay,
that.
so let me just here wrap it up in 5 minutes, and then we can have Q&A. Is that okay?
Yes, that sounds good.
Okay. Okay, that's fine with me. So let me just quickly go through it, and then we will have some Q&A. So you can see that like there were some scams and fraud, and then the regulations were not clear. The legal status of crypto assets was also not clear, and so there were some Sharia issues related to crypto assets, which were raised by Sharia scholars. For example, the digital nature of the crypto asset, and that whether they are existent or non-existent. That was basically a debate. And then whether intrinsic value is another problem with the crypto asset, that they did not have. The idea is too vague, that whether they have intrinsic value or not. And then asset backing, some of the crypto assets, they do not have any asset backing. Because of that, it raised Sharia issues as well. And there was so much uncertainty because of scams, and also because of the fraud, and people did not have enough knowledge to get into the phenomena. Speculation was also there. So some of the scholars, they consider that it was in fact a form of gambling, while if you are investing in crypto assets. And of course, like immature technology was also there. So smart contracts were run on the blockchain for crypto assets, and there were some loopholes which were exploited by the hackers. So this is because of it. The blockchain technology is immature, and still it is a work in progress. And then another issue was whether private entities are allowed to issue currency or not. That was another debate. So existing fatwa, if you look at them, although like they try to tackle this issue, some of them they uprightly banned crypto assets, saying that they are not permissible in Islam, in Sharia. And then some of them, they were saying that they are permissible. And some of them, they basically have a very conservative approach, that whether they, and they're saying that they are not they are actually the form of confusion, gambling, and also form of exploitation. But my approach is a little bit different, than saying that whether you are basing your idea and fatwa and Sharia ruling on the knowledge in the newspapers, and also on the internet. You need to actually look, what is the phenomena, and you really need to understand the phenomena itself. So because that is with that, you will be able to basically understand the crux of the issue. So from a basic question will be that what are crypto assets then? And then if you understand that what is it, then you will be able to pass a Sharia ruling on that. So the term, for me personally speaking, the term cryptocurrency is a misnomer. And I think that there are so many crypto assets, but not every like most of them are not currency itself. They do not they are not able to fulfill the criteria of being a currency. So we should not be calling them currency at all. They should be called crypto assets. And how we can define crypto asset is like it's a digital representation of value that uses cryptographic technique. So digital means it does not have any physical form, but it is in the form of virtual or intangible asset. And second terminology is very important, like value. So where these crypto assets derive their value from. So well, it can basically drive its value from various sources. It can be trust, it can be commodity, it can be business, project, state, government, right, benefit, user product, anything. So it can drive its value from various sources. So this leads us to basically categorize crypto assets in different categories and in different types. So we have coins, tokens, and hybrids. These are the initial three types. And then tokens can be divided into utility tokens, equity tokens, and commodity tokens. So these are basically the differences between a coin and a token. In a nutshell, I can say that just to save the time, I will just go through it very quickly, saying that coins are actually the digital assets or crypto assets which drive their value from the people's trust. And tokens are the digital asset which drive their value from an underlying. That underlying can be different, like that underlying can be a utility, can be a share in a company, or a specific commodity, physical commodity, or that token can basically gather all types of characteristics of digital asset and can become a new form as well. So this can happen. So again, like I said, that we need a new ijtihad, but you need to have the fundamentals there, and then you can basically extend the ijtihad and say that whether the crypto assets are Sharia compliant or not. So for that, like you need to understand that what is property mal. So mal should have like four characteristics, like it should have commercial value, naturally desired, number two. Number three is capable of being stored, and number four is capable of being owned. If these four characteristics are available, then you can say that this crypto asset is mal. But whether it is permissible mal property or not, then again it's a different question. For example, like wine is not a permissible mal, although like it's property, but it's impermissible. And then you have something different, like a car or a house, which is a permissible property. So again, on this basis, we can basically create a Sharia screening criteria for crypto assets. Alhamdulillah, I was able to basically build a screening methodology for crypto assets where you can say that whether a Sharia crypto asset is halal or haram, or is it permissible to use or not. So like I said, that there is a lot of confusion and we have to go through with some tenacious and then very cumbersome jobs and understanding before arriving on a conclusion that whether it is Sharia compliant or not. So the way forward is basically we need global consortium. So like Islamic banks, Islamic financial institutions can form a global consortium to do research and development. And that research and development should not be confined to a single discipline, but it has to be a multidisciplinary. And we need to have dedicated fintech labs, business incubators, and sandboxes. And we need to have collective ijtihad. For that, we need to have collaboration among the Sharia scholars as well. So these are my recommendations. And with that, basically, I end my session and I open the floor for Q&A, please. So please go ahead. We still have time for Q&A. Thank you.
Dr. Farooq,
Yeah, this is Azhar. Can I?
Dr. I'm Dr. Kester Bilal from Pakistan. Dr. Farooq, are you listening to me, please?
Yeah, I can listen to you. No problem. So
okay.
it's why clear. It's very clear.
Okay. As the time is short, so I just cut off the appreciating words that you have a good lecture.
Yeah,
like
please,
good
please.
session.
Just let go the formalities and then just go into the
Okay.
directly go to the question.
Okay. The thing you have addressed that Islamic fintech has a great muscles, and also you discussed so many issues regarding the Sharia compliance and Sharia like that. The question is that you told us that the solution of the open banking and the issues may be resolved by the ijtihad. So being a Sharia scholar and being a student of Mufti Taqi al-Usmani, how being a religious scholar, how the collective ijtihad may be possible? Because what should be the new innovative or agile area that we Sharia scholar may have developed in our may get skills are developed that area.
So I think just give me a few points for you to answer that question. It's a very good question, by the way. So I truly believe that we have already seen that Sheikh Taqi Usmani and then other Sharia scholars are actually sitting in different forums and then in different committees and Sharia boards. Because of that, I can see that like there is a form of collective ijtihad. So in terms of ijtihad, we do not have to have a new approach. That's not my intention actually. So my intention is actually to look at these issues from a fresh look. So we need to have some Sharia scholars who can understand technology, for example, like how blockchain works, how smart contracts works, how decentralized application work, how decentralized systems work. So we need to understand that, because I think the agents in those environments are different. And we need, I'm not saying that you need to basically completely have a new form of ijtihad, but what I'm trying to say is that like you need to have a completely new look at them while understanding the fundamentals, number one, and number two, the technology itself, that how it is working. After that, you will be able to basically have a very good Sharia opinion on that, which is very well researched and very concrete. I hope that I have addressed the question rightly. Okay.
Yeah, this is Azhar
Yes.
from Pakistan. I have a question on the business side for Islamic fintechs. My question is that how do you see, Dr. Farooq, the Islamic banking industry itself to move fast and swiftly to adapt to the changing environment? And how can we be very agile in the current COVID-19 situation?
So I think that financial institutions are already working on these lines, but I haven't seen any good good approach from coming out from Islamic financial institutions. So, and it is very sad actually that the situation is that I was talking to one the CEO of an Islamic bank, and then he was telling me, Farooq, we are already using fintech since 1990s. I said that, how come you are using fintech? Because then he said that because we were having ATMs. So I think the mindset needs to be changed. And then we need to see that like what technology can bring us, what technology can bring to us in the form of benefits and also in the form of advancements. So if we can basically leverage on those things, then we will be able to actually use the technology for our own good. Now, again, going back that how commercially we can benefit from it is that the problem is now that we need to change the mindset, number one. And we need to just stop following conventional finance. Most of the Islamic financial institutions, even for the innovations, inventions, for technological advancements, adoption of technology, they look towards conventional finance first. They are looking at their conventional peers that, okay, whether they are adopting this technology, then it's good. Otherwise, we will just stick to our legacy systems. Now, big financial institutions may be very slow to adopt technology because due to their own constraint. But I think that startups and small companies like SMEs can basically come into this picture and then they can be very agile and they can be very innovative in their approach. So I think that I am basically tying up my hope more with the startups and SMEs rather than big established financial institutions. So I hope that I have answered your question.
Assalamu alaikum.
Walaikum
This is
assalam.
Dr. Rafiq from Indian Kashmir. So actually, I have a simple question. What is the scope of financial engineering and creating of different financial products from the perspective of Islamic Sharia with regard to this fintech?
Sorry, can you say what is the, sorry, I missed that part.
Actually, what is the scope of financial engineering? That means what the various financial products that need to be created, keeping in view the changing technology. What is the scope of it in Islamic Sharia?
So I think that the scope is very huge because starting from scratch, we need to have a very different skill set in terms of financial engineering, because you do not only need the financial knowledge to implement the financial engineering. You really need to have a multidisciplinary approach. So like you need to tie in Sharia scholars, IT professionals, and also other business developers to come up with a fintech driven product. So because of that, I think the scope is very wide, and it is not constrained only to a single discipline. So that is one thing. Number two is like even for financial engineering, you also need to understand that how technology works and how a product or service will behave in a completely digital environment. That is again another consideration we need to keep in our mind.
Thank you, sir. Thank you.
Go to hack.
There's another question coming up, but I think there's a sound issue.
Okay. So is there any question?
I have a question, Dr. Farooq.
Okay, I think
we're going to take one last question because we're already over the time.
Okay, so one last question, but by the way, just before taking that question, let me just give you, let me just say it quickly that you have my contact details. So I would be happy to basically engage in any discussion or any knowledge sharing session. I welcome all the comments as well or question. If we cannot cover them in this session, then we can basically have it offline. And I can basically come back to you individually. No problem with that.
All right.
So yeah, one last question.
Can I ask a question now?
Yes, please.
All right. Dr. Farooq, my question is that from whatever from this presentation, it seems that now in the case of this fintech, the ball is not going to be in the court of the banks only, but also with the other service providers, and there'll be a chain of other service providers who would be the stakeholders in it, and it has to be done quite seriously, and it will not be just the banking sector. Is that so?
Yeah, I think that you are right, that you can see that like a financial product does not have to be in the future, does not have to be rolled out by a financial institution. That's what I was saying. So like there will be so many different incumbents they can be non-financial institutions, but offering you some financial services. So for example, like talking about banking. So a new concept is developing, open banking, but also banking as a service. So you do not have to have an institution or a specific product for a banking, but you can use banking services because the platform will be there, which will basically enable you to use banking as a service only. So for example, like you are using your Facebook account, and then on the other side, you will also managing your finances through your Facebook account. That can also happen in the future. And you can also do some money transfer, remittances, payments. Also, you can also do some savings and deposits also through your Facebook account. I'm just saying, maybe it can be a telecom company which can cater various financial services to you, or maybe it may be a big tech or IT firm.
All right, thank you very much. Indeed, I think that was the last question. And thank you
so
for
much.
answering that. Dr. Farooq Habib, it was a wonderful presentation, wonderful session. Thank you for your time. We really appreciate that. And we're also thankful to the participants. We have got the maximum number we've got was about 75, and the average was, we were at around 70. So that is a very good number. We really appreciate the participants' interest in Islamic finance. We will continue to deliver the service. And as participants have already been informed, this is a series of 5 consecutive webinars. Even though you'll be receiving your certificates for this individual webinar, but if you complete the 5 webinars, we will also send you a master's certificate in Islamic finance. Then there will be another series that will be starting after the 5 webinars are completed. And those will be, each series of 5 webinars is going to be on a specific topic. So for example, we have one series on Sharia governance, the other one is on liquidity, and we can also have a special series on fintech where that is going to be like a coursework, and you'll get an advanced certificate for that. So again, the next event is going to be next week. We'll confirm that and we will promote it again. Please go ahead and register for the next event. All those participants who registered for our first seminar and the second one are automatically registered for our third and fourth and fifth webinars. So if you don't want to register, that's okay. We need new participants to get in and get registered. Remember that the maximum capacity that we have for this webinar is 100 participants at the same time. So we cannot take more than 100. So make sure that you enter the room 5 minutes before the starting time so that your space is reserved. Finally, again, Dr. Habib, thank you very much indeed. We will continue to work with you again in the future, and thank you to the participants and to the organizers.
Thank you so much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you very much.
Alaikum salam wa rahmatullahi wa barakatuh. Thank you.